You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. Tuesday, July 25th, we got a great show for you coming up today. We're talking about stocks that have earnings reporting today that we own, particularly AT&T, McDonald's, and Seagate. So look for each of those individual videos posted today. All right, let's go ahead and get started. On the show, we readily point out when a stock is doing well. We've pointed to Activision going up 20-30% plus since we've been talking about buying it. Nintendo upwards of 70% since we talked about buying it. And some of the other good stories that we have. But we also just as readily point out stocks that we messed up on or are tanking that we own. And Seagate is a perfect example of that. Seagate was down almost 20% today pre-market as they released their earnings, and they got crushed. They missed every way, shape, or form on their estimates. They missed on their revenues, their earnings per share. Their forecast wasn't all that great. So on top of that, they're making a change in the CEO. So now that's probably the only positive thing I saw from this. I'll link the article, obviously, as always, in the video description. But the only positive out of the news was they're doing their CEO switch now, which a bad quarter like this is a perfect time to kind of slip that one by, minimize that impact. You don't want to get that impact again doing it later when you have a good quarter. So really bad news for Seagate. So let me pull up their chart here. We literally just bought more of this a couple of weeks ago. So you can look for those stories out there. So yeah, we got burned on Seagate. Let me pull up their stock here. Thought I had it. Thought I had a link here. All right, 15% they're down now. So they made a little rally back. You can see on the chart here. This morning they were down a ton. Little rally back, nothing big. Still down 15%, which is unbelievable. You don't want to see days like this. Pull up you can see the cliff. The cliff they fell off on in the 5-day. Now, putting into perspective, put this into a yearly chart or a 5-year chart or the max chart. It's just a bump in the road. As they could potentially rally. Let me pull up the right color here. As they could rally back up, as you can see, a little dip. Rally, little dip, rally. As they grow, little growing pains there. So looking long term, this is, I don't want to say a good thing, but you don't mind seeing pullbacks or a bad quarter here or there. That's when you buy in the stocks. Now, if they had missed on revenue and their earnings were good, and they dropped 7% or so, I would be ecstatic. That would be a really good buying opportunity. And that's kind of what happened to Hasbro yesterday. Very happy to see that. Now, a big 15% or 20% drop, there's a little cause for concern there. You got to see why they missed on everything. Generally, you shouldn't miss on anything. A mixed report when you're investing long term is kind of what you want to see because it just gives you an opportunity to buy. Obviously, if it just keeps going up and up, you're going to make a lot more money, and you'll find buying opportunities. You can always find buying opportunities, even if it's going up like crazy. There's always that day here or there during the month where the whole market pulls back. So you always have buying opportunities if it's going up. But in this case, a lot of negative things to look at here for Seagate. Not too thrilled with, but it's a buying opportunity, another buying opportunity. I still feel strongly that the hard drive and disk storage space is a strong one. we've talked about before that Western Digital may be the better investment, and we missed on that one and we went with Seagate. But I think either one is going to be great for a long-term play. Now, if you were trading and you were short-term, what would I have done if I was trading this and I thought maybe they were going to have an earnings beat or they'd be okay and they'd have a little bump, 2 or 3% bump, let's say, and I just traded into the earnings report, and it dropped 15% like it is now, or 20%. This is one where you take it on the chin and you lose your money and you get it back somewhere else, unfortunately. If that's what you're doing is you're trading, you're getting it out. This complete miss, complete failure. Learn and take your lumps, take your loss, move on, and make another trade. Make your money back up in another trade. Long term, you hold it here and you buy more. And we invest long term we're looking at 10, 15 years. So we still think it's great, and they have a pretty strong dividend yield, 6% plus, I believe it is now. But I'm going to show you this sheet. This is kind of how you look at it when you see a big drop like this. One of the things with investing in dividends is that's a little tiny, teeny safety net that you can have there. So just a quick little sheet here. And you can make some for yourself for the stocks that you have. Let's say we invested $1,000 into Seagate at $40 a share. It's now down to $33.80 a share. We have 25 shares. So it means that our $1,000 has now become $845. And with stocks, there's the risk and reward. This can happen. Could have easily went the other way and it went up, but here it is. Right now we are looking at a loss of $155. Now, if you look at the dividend that they have, let's say all things being equal, the stock just stays stuck in the mud here around $33. Eventually, in 2.5 years, that dividend that you get from owning the 25 shares of the stock, in 2.5 years, you'll make that money back that you lost, $155, a little less. So you'll get money and you'll get income from the dividend that will offset your paper loss of $155. So that's a little something you can hang your hat on when you invest in stocks with dividend long term, or if you're making a medium term trade or something like that. You can say, all right, I can collect the dividend and shore up my loss a little bit, half my loss, but it can take some time. So always look at that, what your dividend payout's going to be. It eases the pain a little bit when you get clobbered over the head on a stock like this. Now, like I said, yesterday Hasbro had mixed results, pulled back way overblown. It was 10% plus. I think that's like Christmas. That's great news. You can buy into that stock. Seagate, we're going to have to reevaluate everything there. I'm not going to sell them or anything crazy like that. I just want to re-look at what they're doing, the new CEO's plan and stuff like that, and then we'll decide if we keep them or if we've got to just take the loss and move on to Western Digital or something. Still believe in the data storage with all the cloud computing and data centers. Everything's being stored there. You still need hard drives to store it on, and the amount of data that's being stored is just growing exponentially. So still think this is a great investment for long term. But when you have a miss across the board, you want to really read through the report and everything that was said, why they missed, where it all was at. So we'll be doing some more homework on Seagate, dive into the details there. Let me know what you think on Seagate. Could be a great opportunity to buy long term. You just never like to see drops of this magnitude. Happy the other ones performed well today, but let me know what you think on Seagate. That's it for this recap of Investor XP. It's the investing show for gamers. You can contact the show on Twitter or shoot us an email. Leave us some feedback. Give us a thumbs up if you enjoyed the show. We're going to be tweaking the show a little bit, making some changes, so your feedback is very much appreciated. So subscribe if you haven't already also, so you get the latest investing news for gamers. Thanks for watching. We'll see you tomorrow.